Hey guys, how you doing? This is Renzo again with TF3 Task Force Financial Freedom. Uh, I've been posting videos because I had friends and family members come to me and said, "Hey, can you show me, teach me, tell me something about the stock market? I want to learn, but I don't understand it." So I'm trying my best to make these videos as simple as possible. However, if they're still confusing to you, make sure to write down your notes, watch these videos over and over. If you don't understand these videos, then YouTube other videos about the same content, and you might be able to get the answers or the explanation that you're looking for. Um, Trading in the stock market should not be difficult, but we make it difficult. We as traders, as people, as humans, we make it difficult because we tend to overthink. We tend to jump in without knowing things. When we see green, we jump in. When we see red, we jump out. We don't know what we're doing, and that's what brings me to today's video. Today's video is going to be the first video on technical analysis. So, what is technical analysis? Okay, technical analysis is also known as chart analysis. So, if we use the word chart analysis, now we're going to analyze the chart. Okay, so this in front of you is the chart. Okay, this blue bars here at the bottom it represents the volume for the price, a specific time frame. Don't worry about this right now. We're not even going to discuss the value right here or the volume right here. What we're going to look at is the chart. So this is the chart of the SPY or the S&P 500. The very first thing we're going to learn today about chart analysis is how to identify support and resistance lines. Okay, so I'm going to move here to the daily chart, okay, D, and now I'm going to zoom in this much. Let me see. Okay, if you see here, there's areas where the price went down and the price went up, price went down, price went up, and there's some areas where the price could not go any higher and then it went down, came up, couldn't go any higher, and it went down, came up, couldn't go any higher, went down, came up, went down. Okay, so that's what we call support and resistance. Support is the floor, is when the price of the stock goes down to a point where it finds support, it finds a floor. It will not go below the floor and then it bounces back up to the upside. It's like jumping. If you were jumping, every time you hit the floor, you're not going to go any lower. You're going to bounce back up. And you might even go higher every time you bounce back up. Now, what is resistance? It's the opposite. It's the ceiling or the area where the price goes to and it cannot break through and it has no option but to go back down to get another bounce to the upside. Okay? So support is like the floor. So once the price of the stock comes to a point where it finds support and it shoots back up. And resistance is the point up high where the price of the stock cannot go any higher and then reverses to the downside. So let's look at the 4-hour chart because it gives us a lot more information. Okay, so we're going to pick a few areas to identify. And for these purposes, I'm going to make rectangles to identify the zones. Okay, so let's start here from the left to right. Let's identify areas. But the thing is this: these areas of support and resistance have to be very well identified. Okay, they cannot be like a little higher and a little lower and a little higher and a little lower. These are areas that are very, very well defined. For example, right over here, we see in this area that right over here, the price went down, right? And it stayed here. But when it tried to come back up, it got rejected. And it came up again. and it got rejected. And it came back here a third time. So what we're going to do is we're going to put a square and we're going to include all of these areas. Okay? So I'm going to call this my zone, my resistance zone. Okay? And I'm going to change that color to make it pinkish. Okay? So pink or red means resistance, right? So now we know that there is a resistance zone right over here. That means that every time the price try to come over here, it's being rejected. Okay, so you see how it came down, it came up, it got rejected, came down. It came up, it got rejected, came down. It came up, it got rejected, came down. It didn't even get to that point here. However, though, in the future, if this price goes up, it might come to this point, and now we know that it might come back down. Okay. Now, let's identify a well-established or very good zone of support. So let's look at this area right over here, okay? You see that every time the price came down, it came back up. Came down to the same area, and it came back up. Came down to the same area, and it came back up. So it found support right over here, okay? So what happened later? It did the same thing. So if we draw, I'm going to draw my square a little bigger like that so it can include all of those. Okay, so now I'm going to make this light green to represent an area where the market came down, it found support, came down, it found support, came down, found support, came down, found support until it broke through it. Okay, here, if you see, even though it went down, it found some sort of support right over here. So now we have a zone of resistance and we have a zone of support. Let's see if we can identify another well-defined support and resistance. Okay, so let's see. We're gonna do it right over here at this point. Okay, so you see how the price came up and it came up and it would not break, came up, would not break, came up, not break, and went down. So I'm gonna draw my box to include all of those in there. Okay, so I'm gonna leave that one blue to explain something to you. Now we know now that areas where the market cannot go higher are called resistance points or resistance lines or resistance zones. Okay, areas where the market finds support, right, is called a support line or a support zone. What is the theory? The theory says that old support lines become new resistance lines, and all resistance lines become new support lines. Okay, so let me see if that makes any sense. I'm gonna delete this for a minute. Oh, I actually duplicated it. I'm gonna delete it. And I'm gonna do this again. Okay, we see that we have an area of resistance right about over here, right? So from this point to, I'm gonna do it to this point. Actually, I'm gonna draw it all the way here to the middle. Okay, check this out. In this area, the price went up and it got resisted. It could not go higher. Went down, came up, and it got rejected, came down, came up, got rejected, came down until it broke through it. But once it broke through it, this resistance line now or zone now became the support for this bounce. See how it got rejected right over here, got rejected right over here, Once it broke through it, watch this. Now it provided support. And then it provided support until it broke through it. Now it broke through it, right? So from here to here, let me see if I can put another rectangle. From here to here, okay, I'm going to change the color. It provided support. And then it went back up, and that old support zone became a resistance zone. Now we move forward and we see that this old resistance, right? Resistance, resistance, resistance become support or became support again for this bounce, and then it came back up. Does that make any sense? I hope it makes sense. If you have any questions, watch this video again, take notes, and practice. Once you have your training account, practice drawing support and resistance. Now, this support and resistance are for the 4-hour chart, okay? So it's gonna take a while because every one of these candlesticks represents the price action for 1 hour. Okay, so it's gonna take correction for 4 hours. So it's gonna take 4 hours for one of this to develop. So 1, 2, 3, 4, 5. So that's 20 hours before we can see any resistance or any support. When I day trade, okay, I use the same concept, but I use a smaller time frame. Why is that? Because just like we have this support and resistance throughout the days, right? We can also find support and resistance in an intraday trading day. So for that, I use the 1-hour chart, 1 hour right over here. So I'm gonna take this much information. Okay, so I'm going to start identifying my areas of support and resistance. So right now I can see, let's see where I can find a very, very well defined support and resistance. So I find one right over here. Okay, so I'm going to take this and I'm going to do this right here. Why did I do that? Let's see this information. Price comes down, comes back up, comes down, it breaks, it comes all the way down, it breaks through it, and then it finds resistance. See, this all support now becomes resistance, resistance, until it breaks through it. It breaks through it, it comes back to that area. I'm gonna remove these lines right here. It comes back to that area, okay, and it bounces back from it because we know that that was previous resistance, and then it shoots up until it breaks through it, and then tries to go through it to it and break through it, but it gets resisted again. The price comes back up to the same area, and look at this, it gets resisted again, it gets resisted again until it breaks through it, and then when it comes back down, it comes and bounces on this area. So it's a good area of support, resistance, support, support, support and resistance, 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 support, 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 and now we're showing some resistance right up in there. Okay, so today's trading day actually was right over here. The price opened, it went, it got rejected, and it came back down. Now, how low can it go? We don't know yet, so let's try to find out. Let's try to identify a good point of support and resistance. Okay, so let's see if we can do that. So I think that this can go into this zone. Okay, and why is that? Let's look at this right here. Let me see if I can expand this. Okay, so it could go down to that area because we see that in the past the price came down to that area and it bounced. It came down to that area and it bounced. It came down to that area and it bounced. It came down to that area and it bounced. And this time it almost hit that area and before it bounced up. Let's see if we go this way. Okay, look at this. If we extend this even farther to the left, okay, we're gonna see that in the past, right over here, okay, let me extend this right over here. That area right here, look, it was resistance, it was support, it went through it, price went down, it hit that area, almost hit that area, and it bounced back up. And if we move forward, we see that later eventually the movement went down to the same spot. It came back up, it came down, it bounced right there, it went up, it bounced a couple times, and now it's probably gonna hit that way before it decides to go lower or to go higher. So that's what I use for my intradays. I can even go lower to the 15 minutes, okay, or the 30-minute chart. So why do I do that? Because throughout the day, we're gonna have more support and resistance, okay? So let's take a look at this right here. If we look at the 15 minutes, okay, we can see that in this area, we had at some point we had resistance, and it was support. It was support. It was resistance. It was resistance. It was resistance. So what I'm going to do is this over here. I'm going to do this just like that. Okay. And I'm going to call this right over there another area of support and resistance. Okay, and look what happened this morning. This morning, the price came up to this area and it got resisted. Why? Because we have one resistance, two resistance, three resistance. It failed to break through and it went down, right? So now let's see if we identify another small time or small time frame support and resistance. Okay, we see this line right over here. Okay, look at this price action. It came to this area, it got resisted, it got rejected, it got rejected, it got rejected, and here it became support. So I'm gonna do a small rectangle right over here and see what happens. So now we have another area of support and resistance. And if you take a look at this right here, we can see that the price came down to this area and it jumped back up to this other area and it came back down. And when it came to this area, it got rejected. So identifying or understanding support resistance is going to help you a lot when you're trying to find out areas of rejection or areas of support, and it's going to help you really have a better understanding of when to put in a trade to go to the upside or when to put in a trade to go to the downside. So this is the 5-minute trade. I have another well-defined support and resistance right here. Look at this right here. Right? We have support, we got a lot of support, we got resistance, we got support, and we got support. So if we drew another square right over here, right? See, right over here, that was yesterday. It was support, came up. When it broke through it, it came back up, it got rejected. Then it broke through it to the upside, came back down, it bounced. And then today, check this out. Came up to it, it got rejected, and it came back down. If we see this from the 1 minute I do not recommend to do this on the 1 minute chart because you're gonna have lines everywhere. Okay, but if we look at the 1 minute, look at what happened. We came up to this area and it got rejected immediately. So I did not trade this right here because it moved so fast, and I was with my nephew on the phone because I'm teaching him how to do this. But I did take this trade over here because once it found support here, we knew it was gonna bounce, at least somewhere over here. So I did take this trade and I held it for a couple minutes, and I did a couple more trades for only a couple minutes. I think I did it right here too, right here and right here, and I made enough for today. I hit my target in the first two trades, but identifying support and resistance is the key to understand areas for potential entries and areas for potential exits when you develop your strategy. Okay, guys, so let me show you something cool too here. This is the 1 minute chart. I'm going to move to the 1 hour chart, and I have something here that I found. It's called the ATR, support and resistance. ATR means average true range. I can explain that some other time, but right now what you need to see is this. When I put that indicator right there, it already populates the support and resistance for me. So let me open this up. Okay, so you see this blue line that I drew? Look at this red line that is there. So that is the support and resistance for that. So I'm actually gonna go here and I'm gonna change that to, instead of 1 hour, I'm gonna change it to 1 day, and you're gonna see how those lines move. So check this out. You see my blue line? Look what the blue line is, what the red line is. My other blue line was somewhere over here. Look at this green line where it is. So I have that indicator. That's why I love about Thinkorswim, because it allows you to create these things, these indicators, and put them in so it can make your life a little easier and you don't have to spend as much time doing it by yourself. Look at this blue line right here that we identify as support. Look at this green bar that was populated by the program. It's in the same area. Look at this red line, right? Or this blue line. I say that's resistance and support. That's resistance, resistance. And we get a green bar, and that is resistance. Like I always say, the indicators, you cannot trust them 100% because indicators are just programs, right? People made the indicators, and they can be a lot of fun, but they can also not be as accurate as we want them to be. All right, let's take a look at this right here real quick. See, in this case, we hit that resistance and it came down only for a little bit, and then it didn't even come to this green before it went all the way up, all the way up, all the way up. It hit this resistance a couple times. It never came down. But when it did come down, it came down to this point. And then from this point, it came back up. So it depends on how you want to use this right here. I recommend you play with it for a little bit first, but you need to understand how to make your entries and your exits. All right, guys. So that is it for support and resistance today. If you have any questions, leave me a comment, and I try to answer that. If you want to jump on a Zoom, let me know too. I try my best to accommodate my time so I can be with you, and all I'm doing is sharing my information. Please do not trade what I said. If you're not comfortable with it, if you're comfortable with it, that's cool. But again, like I always say, you have to train. You have to open a paper trading account, and a paper trading account is going to allow you to make mistakes in the market without losing your real money. With that, okay, let me show you what a paper trading account will do. So let me restore this. I'm going to put this back on the 1 minute. Okay, and then I'm going to close this, and I'm going to log in again to Thinkorswim. Okay, so when you have Thinkorswim, you're gonna log in, and then it's gonna give you two options. So you make sure that you click the paper trading account. It's gonna have the same username and password. So you put in your username and password, but here you have to click on paper money. Make sure that the yellow or the amber, whatever you're going to call this, says paper. If not, it's going to say live trading. Okay, so you log in and the chart is going to be the same, but instead of saying real-time data in green, it's going to say it in yellow. Okay, or orange, whatever, however you want to see that color. So let's see. There you go. So I'm gonna close this right here. You wanna log off? No. What I have to? Okay. There you go. I just accepted whatever is said in there. There you go. So this is NVIDIA. It says simulated trading delay data. You see that right there? Delay data. So even if I was training on this right here, it'll be on a delayed data because it hasn't been um 20 minutes. Look at that. 20 minutes delayed, 20 minutes, man. So make sure that when you open your account it says real-time data, like my other stock said. Okay, like my other chart said. All right, guys. So this is your simulated account, paper trading account, but you're still subject to the 20-minute delay. However, it's going to help you understand or practice on your charts, and you don't have to put any money. When they give you this account right here, they're going to give you 200, I think it's 200,000 or 250,000. I can't remember. So that's $1,000 so that you can paper trade and you can make mistakes. If you make more money, that's good, but you cannot withdraw it. If you lose all the money, it's not your money, it's fake money. But you can always call, if you blow your account, all $250,000, you can call Thinkorswim and have them reset it for you. Okay, guys? All right, so I hope you got something out of this video, and have a great day, and I'll see you later. Bye.